Well, for more on rates in China, I'm joined by Jonathan Morris. He's an adjunct professor at Georgetown University. Welcome to the show.
Thank you for having me.
Now, for people who aren't familiar with this particular investment vehicle, what would you say are the biggest benefits of rates, and how would you describe them?
A REIT, a real estate investment trust, is a tremendous vehicle for individual investors to buy shares in a portfolio of companies. So you buy shares, it's got liquidity on a stock exchange, so if you wake up tomorrow and you don't want to own it, you can sell it, and it pays dividends on a quarterly basis. So the U.S. has had REITs since 1960. It's a very popular investment vehicle, and we have 192 REITs currently.
So why do you think then it's still in the very early stages in China?
Things take time to evolve, particularly in a country like China. I think the central bank wanted to understand more about it before they released it, if you will, to the broader economy, the broader market. And I think the first REIT in 2015 has proven that it is a conservative investment vehicle. The dividends have been paid, the investors seem happy, and now there's some additional REITs. So it's actually good for investors, and it's good for property owners. So it's a win-win type of investment, which is sometimes rare.
So in terms of the return on investments that people can expect as China's market continues to mature in REITs, what could they be looking at?
The U.S. REIT currently pays, on average, close to a 3% dividend annually. Okay, so our treasuries are about 1.5%. So this is almost 2 times that. I'm not sure exactly what the dividend rate is in China, but the dividend and the appreciation over time is what investors seek. Keep in mind, they have the liquidity factor. So if they, again, decide that they don't want to own the REIT, they can sell it. But overall, they can look at double-digit types of returns over a relatively 5 to 7 year period, relatively short time horizon. So it's a very attractive investment vehicle.
It certainly appears that we've seen a lot of progress since 2015, up to about 16 REITs right now. How do you expect that progress to keep going? What should the momentum look like, you think?
I think it'll have a great deal of momentum, because it takes an existing portfolio to convert to a public REIT, which is what these 15 or 16 companies are now. And it is the owners of the portfolio who need to decide that they want to convert to become a public REIT. Once they see the multiple benefits that they can achieve from it, and once they see that there's a legitimate market now for investors to buy into these REITs, I think that will accelerate greatly, in the years to come.
And what do you think could be some of the unique issues or challenges posed by trying to grow this market in China?
That's a good question. Since it's so new, I think investors are going to want to have more confidence in the structure and the investment. And what has happened in the United States is we have a lot of analysts, REIT analysts, that talk about different companies that are already REITs. And you can read newsletters, you can read analyst reports on each of the companies, which are completely independent reports. And the more that comes out in the Chinese economy, I think the greater the, not necessarily explosion, but the greater the ramp up will be in the confidence in investing in REITs.
So looking globally at some of the more mature REITs markets, what do you think could be some good examples that China could look to?
The U.S. is the most mature REIT market, and I find it to be the gold standard, which is what a lot of countries look at. I think China's actually pretty far ahead of many countries. Japan has a robust REIT market. Mexico started about 4 years ago. They have 13 REITs today. Europe has a fair number of REITs as we speak. But in each country, the nuances of each REIT reflects the way people do business, real estate business, in each of those countries. So it's going to be a byproduct of the relationships that people have doing business privately, but in a public format.
Now, we know that China is also trying to develop its home rental market. How do you think this is going to affect what happens with REITs?
Well, the the apartment market, the home rental market in the United States, if you will, is one of the biggest REIT markets we have. We have several public companies that own literally over 100,000 apartment units themselves. So it just happens to be an excellent vehicle to own these rental properties in. The bigger the better with REITs, with public REITs. So critical mass is important, and as they develop that rental market, this is a great vehicle to own those properties in.
Well, thank you so much for your insights. A pleasure having you. Jonathan Morris, adjunct professor at Georgetown University.